So I've gone, as I said, I keep my distance from mining. I work in retail, so looked in consumer discretionary, and came across a company that I'm sure a lot of our listeners will have heard of or potentially have some sort of product in their kitchen, and that is Breville Group Limited. So for the listeners who are unsure of what Breville Group is, they're a global electrical business, and they center their products around the Breville brand. So the coffee machines is their primary, I guess, product. So they're publicly listed in Australia. They also have a group of global subsidiaries who are also leading providers of small electrical appliances around the world. So I guess their strategy is about design and development of kitchen appliances, as I said, and they deliver these kitchen products to over 50 countries around the globe. One of their biggest brands in the United Kingdom is Sage. They've been there since 2013. Cambrook is Australia and New Zealand, also Breville. And then they also have an electrical appliance brand, Ronson, which I'm sure some people have heard of as well. Their major markets are North America, Australia and New Zealand and Europe. And one of the reasons I really like them is their growth strategy over the next coming years, FY19 and FY20, is to really start branching out into Europe, into a number of different companies. So I think from a market point of view, they have some excellent growth potential. So that's sort of a bit of background and context into Breville. For me, as I said, the positives with this company are that they really continue to extend their growth opportunities. So they've said that they're going to be moving into Germany and Austria, and also they've opened in Belgium, Netherlands, Luxembourg, and will be launching in Spain in FY20, or the first half of 2020. They also have a very strong balance sheet. It's estimated that by the end of FY19, so very soon, they'll have about $50 million on their balance sheet. And I think this is a great opportunity for them from a mergers and acquisitions point of view. So just to give you some context in terms of what that market growth potential is. So from a coffee point of view, and we all know we Australians love their coffee, but so do the Europeans. The German market is the biggest coffee consuming market in Europe, and it's 6 times bigger than Australia and 3.5 times larger than the UK market. So it's a huge opportunity for Breville to extend their product mix and their, I guess, global products business into these markets to try and continue the growth rates that they've been seeing over the last few years. Initial thoughts, Julia?
I like it. One of the things I like about Breville is that, as you mentioned, it's an internationally diverse company, and it's also quite a cyclical one. But when you see, I guess, cyclical companies, they're prone to, consumers not spending as much money. But when that happens, you have the balancing effect of the weaker Aussie dollar, which is a positive in terms of Breville's earnings. So that currency risk helps to balance out that impact from lower growth expectations or weakness in discretionary spending. So that's a really nice thing about Breville. You've got this growth company that's expected to see double-digit growth, so around about 11%, I think, this financial year. And then it has that balancing impact of the Aussie dollar, which also comes through to help on the risk side of things. I think one of the things that Breville's done outstandingly is really picked the trends that are happening in the appliance market. I remember a few years ago was people spending $1,000 on blenders, and I thought at the time, who on earth would spend $1,000 on blenders? And it turned out, Breville Group's blender, which was actually more than $1,000, turned out to be a huge hit, and it was behind a lot of the growth. And now the next trend that they've pinpointed really well, as you mentioned, are these coffee machines. So they have a license agreement with Nestle Nespresso, so those coffee pods. Who doesn't love George Clooney? But as you mentioned, our appetite for coffee is just growing, especially in some of those European countries that they're looking to enter into. So great pick.
Yeah, they've partnered with Heston Blumenthal in Europe to really push this coffee machine or that coffee experience, I guess. And yeah, they're really good at what's called going to market or direct to market in terms of advertising and marketing. They have a lot of interactive displays and really creative ways to advertise their products that I think really appeal to the use case for a lot of their customers. So yeah, I think positive signs. I just want to talk about their growth and their balance sheet a bit. So they've got a market capitalization of 2.2 billion, revenues of 440, but their EBIT or their earnings has really had sort of a very successful past 3 years. They've had a 3-year growth rate of 25%, but that's simultaneously increasing their marketing and research and development investment by about 60%. So I think it's really been an efficient growth rate from Breville, which appealed to me. Julia, do you want to talk about, I've done a bit of a discounted cash flow now. I'm not sure if this is something you do, but I'd just like to run it by you if you don't mind.
Sure.
So they have a current earnings per share of 0.51 cents. I've put in that the earnings is expected to grow at a rate of 10% for the next 5 years before leveling out to a growth rate of 5% thereafter. And I said the discount rate of about 8%, and it's come out with a stock price value of $22.26. Its current price is $16.96. What are your thoughts, and I'm not worried about the price here, but what are your thoughts around the rate of return that I've put in and also the expected growth rates? How would you approach this?
Well, based on, I guess, the last few years, that's a pretty good growth rate. Consensus forecast is for growth of around about 11% at the moment. The big risk that I see to that, and I think that around the $20 mark is probably just a touch optimistic. It's probably closer to sort of that $17 level at the moment. But having said that, if the momentum continues, this is a company that has a track record of outperforming, and the August reporting season is coming up, and we might see the market adjusting its expectations around growth. The key risk for me from this company is that it is a consumer products company. And while it's done very well in launching products that the market wants and the trends that are in the market, from $1,000 blenders to $1,000 coffee machines, I guess in terms of the future, will they necessarily be able to bring a premium product to market that the market wants that helps to support that growth rate? But look, for the time being, I think that lower Australian dollar is moving in its favour, that expansion in Europe is going well, and as you mentioned, those double-digit returns means that, it probably does justify a slight premium to what the market is proposing, because it is very hard to find growth at the moment. And that's not just an Australian company story, but it's a global story. So when you see these companies that do deliver on double-digit growth in terms of earnings and do it consistently, then the market does tend to be willing to pay a premium for that growth.
Yeah, I just want to sort of echo those comments around its, I guess, what it needs to look out for. And with the RBA dropping interest rates, it's an indication that the economy is not going as well as they would have hoped. And in a consumer discretionary business, sometimes these $1,000 blenders and coffee machines are the first things to go when it comes to keeping a mortgage repayment or paying for the more necessary things in life rather than the luxury things. So another thing for me is just keeping an eye on broader economic conditions, because I'm sure it will have an impact on their future growth as well.
Absolutely. Having said that, the UK has been a bit of a basket case because of Brexit, and they've still managed to see double-digit returns coming through from the UK. So it's an interesting one that I'd be keeping a close eye on, because logically you'd be thinking that weaker economic conditions would have an impact in terms of consumer-type products like this.
Well, hopefully it's not because everyone's using Afterpay and going into debt buying $1,000 blenders.